Hello traders, and good morning, and welcome to this short video just explaining what we're seeing today in the markets with the safe haven Japanese yen appreciating because of safe haven demand from stock markets falling across the world. So traders, looking at the STOX 500, this is the European stock markets traders, and I'm just going to explain why we're seeing such heavy selling in the markets. We're seeing heavy selling in European stocks. If I also show you the stock markets in the United States, we're seeing heavy selling in the stock markets in the United States. As we can see, heavy selling in the US stock markets. Also in Germany, we're seeing heavy selling in Asia. The stock markets are correcting at the moment, and it's due to a multitude of factors that are driving stocks lower. Now, this is because of the ongoing US dollar, US-China trade war. We have the ongoing political risk with Italy and the EU. We have other risks in the markets with the US and Saudi Arabia over the killing of the journalist. And then we have the worries that markets are having about our rising US interest rates going to slow down the US economy. And of course, the US economy is the barometer that grows global growth. And all these risks, traders, are causing stock markets to fall. And as we know, traders, the Japanese yen is a safe haven currency who appreciates in times of market uncertainty. So when stock markets are falling, investors will sell off their stocks and park their money into Japanese government bonds, because Japan has one of the world's biggest trade surpluses, which basically means they export more goods and services to the world than they import. So there's more money coming into their country than going out. And they have a huge excess of supply of cash. So investors are so confident that basically the Japanese government will always pay off their bond payments to their investors, and there's like a zero risk of them ever defaulting on their debt. So when they dump stock market traders, move money to Japanese bonds, we know that Japanese bonds are sold in local Japanese currency, so the currency is in high demand and the value rises in the markets. So as we see, traders, we're looking against the yen against the US dollar. We're seeing the yen not so much strong against the dollar, because the dollar is very bullish at the moment, with a long-term trend being so aggressive, as we can clearly see, long-term bullish trend as the US central bank is raising interest rates. But if we move to other currencies, we can see a stronger Japanese yen against the euro with the political crisis in the European Union. And we can really see it across the markets for most currency pairs traders. We're seeing a stronger Japanese yen and against our open position for the Canadian dollar. So traders, we understand why the Japanese yen is being stronger. There's no strong fundamentals coming out of Japan that's making investors buy this currency. There's no reason why they're buying it in terms of outside of safe haven demand. That's the only reason they're buying the Japanese yen. Now, the reason I'm not trading this and trying to buy the yen is because, personally, from experience, trading safe haven demand is very difficult, because politics can change so quickly. So situations that we're having right now, such as the ongoing Italian EU budget deficit crisis that's going on, with them going back and forth with each other, with the US-China trade war, with interest rates, and all the other risks that are in the market, they can change so quickly. Brexit, for example, negotiations can go the right way, and all the markets can then get confident, sell off Japanese government bonds, move their money back into stocks, and then the yen's demands weaken, and we can see quick reversals in the safe haven demand for a yen, which is why, traders, I'd rather be trading currencies such as the dollar or the Canadian dollar based on the expectations of interest rates going up. Because as we know, traders, as we can clearly see, I'll give an example. In the beginning of 2018, there was a lot of safe haven demand into the Japanese yen, because of at the beginning of the year, we had the US and North Korea having these war of words about potential war with each other. We had the US starting to go against China. We had the US going against Canada. We had the US going against the European Union. There were a lot of risks in the market that was causing the safe haven demand to go into the Japanese yen. However, traders, as soon as it came to March and the US central bank began raising interest rates in the US, look how quickly all of these gains reversed and the dollar got extremely bullish as markets priced in the 3 interest rate hikes, which they have followed through with this year. Which is why, traders, personally, I would rather buy a currency based on economics, based on the fundamentals for that currency being strong, and why markets are buying it because of the expectation of interest rates going up, rather than buying a currency because of safe haven demand, because there's so many factors driving the yen at the moment. If just a couple of them change, then you know the safe haven demand can be depleted, and then the currency can reverse and move in the opposite direction. So for the dollar traders, we know the US central bank's looking to raise interest rates another 5 times in 12 months. We know the Canadian central bank signaled this week they're going to raise interest rates another few times in the next year or so. So traders, I'd rather be buying these currencies against the yen, and with other currencies such as the euro, I would rather wait and see if Italy and the EU Commission, can come to an agreement on their budget deficit. And if they can, this opens the door for the central bank to continue with their plan to raise interest rates in Europe next year. And we must remember the euro is really forecast to get really strong based on the fact that if the central bank, the ECB, does follow through with their plan, the euro will get stronger because interest rates will be going up. So I'd rather be trading the expectations of interest rates than safe haven demand. That's me personally. You guys can do whatever you please. I mean, it's your money. You can trade as you want. But I'm just giving you my advice on what I try to trade, because I find safe haven demand very difficult to trade, and I've found it difficult from the past with my own experiences. So traders, that's just me explaining what we're seeing. Still going to be bullish for the dollar against the yen. Still going to be bullish for the CAD against the yen. And I will be wanting to buy the euro back against the yen once all these political risks fade away and then markets focus back on economics. Because if you're focusing back on the economics, the Japanese central bank is struggling to get inflation towards 2%. It's been pumping trillions of yen into the economy each year to try to get inflation to rise. It's not working. So that's why there's no interest rate hikes expected in Japan for another 2 years at least. So there's no reason for the yen to get stronger long term apart from safe haven demand, or if of course other currencies weaken in the markets. So I hope that makes sense. Please shoot me a message and I'll be happy to answer your questions. Thank you, traders.